Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we are going to have an interesting session as a continuation of the earlier session that we had in the morning, which was the market snapshot, trying to understand what are the key market price levels, what are the technical price action patterns, what are the key news driving the markets. And once you understand these, hopefully you will be able to do your own analysis and identify trading opportunities for yourself, as well as trade from an informed perspective. So I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and this will confirm that everything is working just fine. Awesome. So I'll be starting by focusing on the economic calendar and trying to see the key highlights in the markets before we move on to looking at the charts. So hello, Steven, and thank you for joining the session. So today being Tuesday, the 21st of November, 2023, there's quite a number of things to consider. Of course, we didn't have much volatility coming from RBA Governor Bullock's speech early in the morning, as well as a monetary policy meeting minutes. So what we continued seeing is the Australian dollar continuing to strengthen against other currencies, especially the US dollar, which has been on a losing streak since Tuesday last week, when we had the CPI data coming in weaker than expected at 3.2%. And this led to a speculation that the Fed may not continue hiking interest rates. And as the markets continue digesting these news, the dollar index continues weakening. And this is leading to some pretty easy to spot trends. And I think this has been the theme for the week. So also, it's important to notice that this is a very short week, as the Americans will be celebrating Thanksgiving Day on Thursday, and their stock market and futures markets will be closed. Yes, the forex market will be open, but we will be expecting some pretty low volatility during that period. So on Friday, the markets will be opened halfway, and this basically means that there is less trading activity, less stock trading, and less commodities trading, which basically means lower volumes. And in this case, it means that all the volatility that we're expecting for the week will be mostly focused on Monday, Tuesday, Wednesday. So the events for today are potentially high impact news, and they may cause some good volatility for the week. So, of course, the most important news for the day will be the Canadian CPI, or Consumer Price Index, from Canada. And of course, once we go through that, then we will be getting the FOMC meeting minutes, and this will be at 10 p.m. So in between, we'll be having the existing, the potential to cause some volatility. And of course, we'll also be looking at a speech from our ECB president at 7 p.m. So Lagarde is due to speak at an event hosted by the German Ministry of Finance, and this could cause some volatility for the euro. Besides that, I don't see news. So on the week, we're expecting an OPEC Plus meeting at the end of the week. That's during the weekend. And there's already speculations about the stock and how it may, about the commodity and how it may perform, especially after the OPEC Plus meeting. So in this case, crude oil is expected to continue strengthening. We have seen quite a good rally happening from Friday last week. Then on Monday, which is yesterday, but then today the steam seems to be cooling off, but then could be seeing some extension of the prevailing trend. So in summary, the key highlights for the day that we will be focusing on is one, futures, which are currently trading mostly lower. So remember, this is the fourth week the S&P 500, the NASDAQ, and the Dow Jones have been on a rally, and we could be starting to see the rally start weakening and take a reverse course. So we could be seeing some weakness starting to emerge in SP 500, NASDAQ, and the Dow Jones. So the futures are already taking a step backwards. And second, there's the turmoil at OpenAI. So for those who are not conversant with what has been happening, last week on Friday, the OpenAI CEO, Sam Altman, was fired. And then after he was fired, his co-founder Greg Brockman also followed him. And then by the time we got to Monday, they were already hired by Microsoft, and this is turning into a big saga. So the CEO that immediately replaced Sam Altman at OpenAI did not hold for long. So within the weekend, they also got another CEO, hired them, and these things did not go well for the employees. So the employees have written a letter to the board threatening to quit and join Microsoft and Sam Altman's team at Microsoft. And 700 out of 770 employees have signed the letter, and they are promising that if their issues are not addressed, then in that case they'll quit and join Microsoft. So Microsoft is open to hiring this team, but at the same time, the board at OpenAI is completely against this. So the letter is demanding that the entire board resigns and they appoint new board members. And at the same time, they're also demanding that the former CEO, Sam Altman, is reinstated together with his partner, Greg Brockman, before they agree to continue working for OpenAI. So it's an open saga. You might want to do some search on the internet. You can search on Twitter and you'll get some more information about that. So NVIDIA's Asian suppliers gain ahead of earnings. So today on the earnings side, the most important company that will be reporting earnings will be NVIDIA, which is up more than 200%. I think it has been the best performing stock in the S&P 500 this year. And with earnings due later this evening, that should be at 11 p.m. after market close, then there's that potential that if NVIDIA reports better than expected earnings, then it could rally, but then it could only be traded tomorrow. So in that case, we can capitalize on the positive correlation between NVIDIA and the NASDAQ. So if there is a blowout earnings, then there's a good likelihood that there will be a corresponding correlation between NASDAQ and NVIDIA. So Japan's Advantest Corporation, which supplies chip testing equipment to NVIDIA, rose 2.9%, while Taiwan Semiconductor Manufacturing Corporation, or TSMC, added 1.4% in Taiwan trade. So this basically shows increased bets that NVIDIA is doing well, which is a major customer to these two companies. Japanese chip making equipment maker, Tokyo Electron, climbed by 1.1%, while South Korea's SK Hynix and Samsung Electronics edged up 0.5% and 0.1% respectively. Japanese tech conglomerate SoftBank Group, which has exposure to NVIDIA through its ARM Holdings unit, added 0.9%, and this is during the Tokyo session. So NVIDIA is set to report its September quarter results after the US market closes on Tuesday. The firm, a major beneficiary of the AI boom, is expected to unveil another blockbuster revenue forecast. So the fourth item that is currently making the news is that the US is seeking over $4 billion from Binance to end criminal probe. So the US Department of Justice is seeking more than $4 billion settlement to end a criminal investigation into the world's largest cryptocurrency exchange, and this is Binance. So a resolution could come as soon as this month and include criminal charges being brought against Binance founder and CEO Changpeng Zhao, commonly known as CZ in the US, the report said. So the story was first reported by Bloomberg News. Citing a source familiar with the matter, the Financial Times said that the investigation into Binance centers around possible bank fraud, money laundering, and sanctions violations. So the DOJ probe marks a fresh legal challenge in the US for Binance. Earlier this year, the US Securities and Exchange Commission sued the company and Zhao, claiming they had carried out an elaborate scheme to evade federal securities laws. Then lastly, rebound loses some steam. So oil prices fell on Tuesday, handing back some of their recent gains as traders displayed some caution ahead of the OPEC Plus meeting this weekend. So the US crude futures traded 0.6% lower at $77.39 per barrel, while Brent crude oil contract dropped 0.5% to $81.91 per barrel. So both contracts climbed about 2% on Monday, adding to Friday's gains of around 4%. And Reuters reported that the OPEC Plus countries was set to consider making additional oil supply cuts when it meets on November the 26th. So weekly US inventory reports from the American Petroleum Institute and the Energy Information Administration are due later on Tuesday and Wednesday, respectively. So, of course, if you check the economic calendar, I don't see the data here. So it should be on Wednesday. So it's tomorrow when you'll be seeing the US crude oil inventories. And this has the potential to cause some increased volatility in oil. So knowing what we know, now it makes more sense to look at the charts and try to understand the current movements. I believe the current top movers for the day, or the most promising one, involves equities. So equities have been on a big sell-off. For instance, if you look at the French stock market index, after hitting this high last evening, you can see it broke this trend line on the 15-minute chart, and there's been an acceleration downwards. I expect this sell-off to continue. So for the Euro 50 cash index, it's a similar movement. So after hitting this high last night, then you can see all day we have been seeing bearish momentum. And of course, for the US top equity indices, as beginning with the NASDAQ, there's a big sell-off high that we saw testing yesterday's high. So since then, we have been seeing only more bears entering this market. And this basically signifies a potential. So for the US 30 or the Dow Jones, after the high we saw yesterday, last evening, there's been a consistent push downwards, meaning that after the 4-week, this is where the rally started, a very big rise, followed by a second week, a third week, and then this week was supposed to be the fourth, but now we are seeing the prices taking an. So for the S&P 500, it's a similar thing. So we had first, second, third week, and today being the fourth week, you can see the acceleration that we saw yesterday is already starting to be reversed, and we could be seeing some further downside momentum coming in from these prices. So in case you have any questions relating to the presentation today, feel free to type that in the live comment section, and I'll be happy to respond. And of course, share my analysis. So hello, Job. I can see Vision ICT, NBA Edits, JSCode. Thank you guys. Thank you for joining the session. Let's keep it going. So as for Brent oil, and this is, I think, something we have discussed today, there was a big acceleration of price on Friday, and then some further, on Friday. Then yesterday being Monday, some further upside momentum, and now a key trend line has been broken here. So it's quite normal to see this happening, that after a trend line has been broken, price may go back, retest the trend line before continuing in that direction. And then from the 15-minute chart, you can see how this is playing out. So a break yesterday, market pulls back downwards, trades downwards during the Sydney and Tokyo session. And once we got to the London session, you can see the attempts to push prices higher, and I expect this to continue. So in this case, if we happen to see an acceleration of price, we trade based on the previous highs. So in this case, a very interesting price level would be the high of last week, which is 83.769. So we could be seeing Brent oil prices accelerating from this point, then jump into this area here before we get to Wednesday and understand further price action. So as for Bitcoin, I remember highlighting this in the morning. I showed that Bitcoin has been trading in this bullish channel. So it had already gotten to this area here and struggling to rise. So eventually it dropped all the way down to the lower trend line. And now there seems to be some form of attempts to break below. So in this case, a clean break would mean an acceleration of prices downwards. And if the correlation between the S&P 500 continues, then a potential for some further drop could be playing out. Of course, the most recent low was around 36,673. So this is something that could be playing out for the day as we progress. So notice how Bitcoin was unable to form higher highs today. So compared to yesterday's high, today's low is much lower, indicating some form of weakness. And now a break below this would see price plummeting to 36,673. So on the currencies front, most bullish one seems to be the AUD-USD currency pair, having broken major resistance levels. And of course, after breaking these previous areas that were working as resistance, now we are seeing an acceleration of price, and we could be seeing some further upside potential. It may not be as far as we think. So it's somewhere around here. There seems to be some conference levels that were acting as support previously. So if you notice the price action around this area here, and of course this area here, then you can see that this was acting as support. And of course, if you also consider these points here, then you can see there's that potential that the market may take a break around that area. So the price action area is not very far off. It's 0.65992 or rather 0.66. So if yes, this should be 0.66. So once the market gets to this point, it's a good area to exit if you already have buy positions. But then if you don't have positions, then it's a good area to monitor and see what price does around the area. So of course, you know, it's a binary outcome, whether the market either breaks or bounces from here. So a break would mean it continue trading higher, but then if there's a bounce, then we push back lower. So as for gold, we basically saw the market breaking below this area. Remember, we have a trend line here. So yesterday there was a break, which was quite disappointing. But once the market found some good support and showed signs of bullish entry, there was a good acceleration all the way up towards the Sydney session, and we were able to retest the 1993 price level for the second time. So this was the first time, and then the second time yesterday. And now, as we approach the New York session, gold is on a rally, looking to break below, above that area. So one key thing to consider is that there was an attempt to go down, which failed. Then the market went up, found the resistance, pulled back, and bounced off the same trend line. So in this case, from what we are seeing, for instance, if the market was to close at this area or higher, then it's indicative of bullish entry, and this might drive the prices higher. So in this case, if you look at the next probable potential target, it's the previous high here, which is a price level of around 2008. So we could be seeing gold progressing and getting to $2008 per ounce of gold. So in this case, very nice bounce has happened. You can see it's more of a pullback, finds support, and then bounces, indicating a very strong entry by buyers. So any break above 1993 would imply a likelihood of price moving all the way up to 2008. So on the USD card front, you can see that the dollar is attempting to gain some form of strength here. But then since the beginning of the day, if you look at this price action here, moving down and then up and then down and then up, it doesn't seem at all that promising. So it's not like a market that is having a very strong directional momentum. So in the morning, we are analyzing that once the market gets here, looking for signs of bearish entry might play out, especially targeting the previous low, which was yesterday's low, around this area here. But then price dropped, but didn't quite get to that area, bounced back up, and it doesn't seem at all as if there's a clean direction. So one key thing that might explain this kind of price action is what we are currently seeing on the economic calendar, knowing that we will be expecting Canadian inflation data later in the day. So the market may reasonably range as we wait to see the outcome of this news. So in this case, I'll just monitor today's highs and lows and then look for a break once the news is announced, and that should be happening in the next 10 minutes. So Canadian inflation is a very important data point because it informs the direction of interest rates and the pressure on the Bank of Canada to make a decision, especially if it was to spike higher or maybe even spike lower. So looking at the economic calendar, I know there is quite a distinction. So if you're looking at the Forex Factory economic calendar and you're looking at Canadian inflation data, you might see a little bit of a difference in terms of terminology. You will see CPI month over month, median CPI, trim CPI, common CPI, and it might be a little bit difficult to understand. So the better economic calendar tends to be the trading economics. From here, you'll get pretty state forward and standard data like you are used to with other inflation reports. So in this case, we are looking at the inflation year over year, and now this is a more accurate measure, which was previously standing at 3.8%. So here there are consensus estimates that this inflation could drop to 3.2% and the forecast at 3.3%. So in this case, we will be comparing the forecast with the previous number. So if the market now drops to 3.3% or below, of course, there will be this argument that the Bank of Canada is achieving its goals. And in that case, there would be no reason to hike interest rates, and that would be weakening for the Canadian dollar. On the other hand, if inflation remains, let's say, around 3.8% or even moves higher, then that would add pressure on the Bank of Canada to hike rates, and that would basically strengthen the Canadian dollar. So core inflation, which is basically inflation minus the price of volatile products like food and energy, previously stood at 2.8%. This is way close to the target of 2%. So we're expecting this to reasonably drop to 2.6%. And if this happens, then forget about rate hikes, and that would be pretty weakening for the Canadian dollar. So month over month, the previous number was negative 0.1%, which is disinflationary. And in this case, we're expecting another number of 0.2% increase in prices. So if month over month we see such an increase, it could be worrying, but if it's a smaller number, then the better. So we'll also be looking at new housing price index, new housing price index year over year and month over month. Then core inflation rates month over month before we look at CPI median and CPI trimmed mean year over year. So that's what we will be expecting in the next 7 minutes. And I'm hoping that now that we have gone through this, everyone will be prepared for trading once the news is out, and you'll be able to interpret the news and make a decision for yourself. So as for Euro USD, it continues the bullish momentum as we had speculated earlier. So from the daily chart, this is how it looks like. And the area we identified was a daily swing, daily price action swing at 1.10302. So Euro is pushing bit by bit, though it had some difficulty moving higher. You can see from the morning, kept going back downwards, but it's already on recovery mode. So in this case, I expect this bullish momentum to continue after the slight pullback that happened here. So some further upside momentum is expected in the Euro USD and potentially getting to this level of 1.10302. So USDN, we saw the pin bar happening here, then the market continued dropping. This morning, it was extremely bearish, and then another pin bar indicating a rejection of lower prices. But then there's no upside potential because the dollar is pretty weak. So from the dollar index here, you can see the continued bearish momentum. So it basically means with a weak dollar, the yen continues recovering some ground against the dollar. So from the 4-hour chart, this is how it looks like. So the area you are targeting was 147.236, and the market is going right back to the same level. So I expect that once the market gets to this point, at least we see another break and potentially another leg. So it's kind of a theme if you think about it this way. The market comes and does this. And then after trading this way, then it comes and forms another leg. So the leg is the big bearish move. And then after some time, you see some consolidation. It may take different shapes, but then in this one, it does this, and then comes here, does this, and then right after that, you see another leg starting and dropping further downwards. So right now, what we are looking at here is yet another preparation of a leg, especially after the consolidation. So the consolidation, in this case, took this shape. And of course, on the lower side, it basically took this shape here. So now if the market breaks towards the lower side, we expect to see a reasonable leg similar to the previous three. So that's it for the day. Thank you very much, guys. I think I almost missed the pound. The pound is just moving as we expected. So we had this cup and a handle formation. I already discussed this in an earlier session. The market forming this pattern here, and then going for the handle, and then a break towards the upper side. So it's playing out just as we analyzed in the morning. And of course, in this case, we expect some further upside. So further upside momentum could be seen from here. And now if you zoom out, you'll notice that the immediate target is 1.26360. And of course, we identified that area because it was previously acting as support and of course as resistance in previous price action movements. So that's it for the day. Enjoy the rest of your day, and I wish you guys peaceful trading. So remember, these sessions are not investment advice. Neither are they a recommendation to trade. So you should always do your own analysis, due diligence, and of course, practice proper risk management. So today we don't want to hear anyone saying that they blew up their account. So remember, one last point on the economic calendar, the biggest impact news, besides the 4:30 p.m. news, will be the FOMC meeting minutes, which will be released at 10 p.m. So at exactly 10 p.m., we expect to see some form of volatility coming from all US dollar pairs and, of course, US equity indices, gold, silver, as well as oil. So last point, we have a new episode of the Bullish Banter podcast. Just check it out on across all our podcast platforms. And of course, if you are a YouTube lover, then you should find it on the FX Pesa YouTube. If you have not subscribed to the FX Pesa channel, make sure you subscribe and get notifications on. So whenever you have a live session, you will be notified and you will not miss a thing. Is the BTC correlated with SP 500? Yes, but the correlation is stronger between Bitcoin and NASDAQ, which is a tech index. So to test whether the DXY is in a bear market, you check the recent low, the recent high versus the current price. So if it's not down 10%, it's not considered to be in a bear market yet.